Good morning, market mavens. It's December 2nd, and as we gear up for tomorrow's trading session on December 3rd, the financial world is buzzing with high-impact data releases. These releases could shake stocks, bonds, and currencies. Whether you're a day trader or long-term investor, here's your quick 3-minute guide to what to watch from down under to Wall Street. Let's dive in. First up, Asia-Pacific kicks off the day early. At 12:30 a.m. Eastern Time, Australia's Q3 GDP data drops. Expect quarterly growth around 0.4% and yearly at 2.1% per forecasts. This comes after a revised slowdown from 0.7%. So any upside surprise could boost the Aussie dollar and lift commodity stocks like miners on the ASX. Keep an eye on capital expenditure too. It's tipped at 3% growth, signaling investment rebound. Over in Japan, simultaneous S&P global PMIs finalized for November. Composite at 52.0, services at 53.2. These gauge business health. Above 50 means expansion. Strong numbers could strengthen the yen against the dollar, pressuring exporters like Toyota. Traders, position for volatility in Australian dollar to Japanese yen pairs right out of the gate. Fast forward to US hours. The real fireworks start at 8:15 a.m. Eastern Time with the ADP employment report for November. Consensus? Just 15,000 jobs added, a sharp drop from October's 42,000, amid lingering government shutdown echoes. Weak data screams labor cooling, ramping up odds for that Fed rate cut next week on December 9th to 10th. Remember, markets are pricing a 67% chance of a 25 basis point trim to 3.50 to 3.75%, down from 90% recently, thanks to sticky 3% core inflation. At 8:30 a.m., export prices for September forecast 0.1% monthly rise, could hint at trade pressures from tariffs. Then, 10 a.m., ISM Services Index. New orders at 56.2, prices at 70.0. Watch if services inflation eases, as it drives 70% of the economy. Soft readings? Bonds rally. Stocks dip initially, but rebound on easing hopes. Energy traders, don't sleep on the 10:30 a.m. EIA crude oil stocks change. Last week's API showed a 2.48 million barrel draw, beating estimates. If inventories tighten further, WTI could push toward $54 by year-end, per JP Morgan forecasts, lifting oil majors like Exxon. Broader outlook? December's historically bullish. S&P 500 up 81% of the time when entering positive YTD, averaging 2% gains. But with AI hype cooling and tariff talks, expect rotations into value stocks like financials. Risks to flag. Geopolitical flares from trade policies could spike volatility, and that Fed meeting looms large. Powell's tone will echo all month. My tip? Diversify. Lean into gold as a hedge, IEM equities for catch-up gains. Stay nimble, set stops, and remember, data drives the dollar, and tomorrow's got plenty. What are you watching? Drop it in the comments. Thanks for tuning in. Trade smart tomorrow.